Hello everyone and welcome to this morning's webinar. Lots and lots going on in the markets, lots and lots going on on the charts and on the fundamental side. So we'll just get on and crack on. But before we do, as always, may I draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Very quickly, for those of you who haven't come along before, this is me. Next to me is my husband, David, and we will be looking at the charts through the prism of volume price analysis, how we use volume price analysis, what it's telling us about the price action, but much more importantly is what it's telling us about where the price action is going next, because after all, that's all we want to know as traders, and so take advantage. And at the same time, as using volume price analysis and how to use it on the charts, we will be it's supported by our own software tools, our own trading tools from quantumtrading.com. But it's much easier. Yeah, pointless me talking about it. Really, what you need to see it is in action on the charts, which is what we will do. Volume price analysis. Yes, it's a price action and a volume, but it's actually a whole methodology. It's like a base methodology. Once you understand it and once you get to grips with it and the elements that make up a volume price analysis, then you can add on your own thing. You can add on standard indicators. We use some standard and we have our proprietary indicators. It's really the basis of what makes, what is happening on the charts. And as I said, which is much more important, what is going to happen next. As part of VPA, there's, as I said, there's price action, volume, there's support and resistance, hugely important. We're going to be looking at support and resistance in a little bit more detail today, not just price-based support and resistance, but volume-based support and resistance. We've got candles, we've got candle patterns, and we've got time. Time is hugely important, and I don't just mean the time frames. I've got a very, very interesting example for you for the pound New Zealand, which is a pair that I've been writing about a little bit on my Facebook page called Learn Forex Trading, and it's a way of looking at time and the time a move can take to develop, and why price moves can take 200 pips can take a matter of I would say minutes, but certainly 1 or 2 hours, and sometimes they can take 15, 16, even 30 hours. And this understanding of time and why price action takes time to develop is also quite important, because it has a huge impact on risk. Because if you think about it, when you're in the market, it is a risky business. The longer you're in the market, the more risk you are taking, and that's why we get very nervous. We see a nice position developing and suddenly something happens and it turns against us. A lovely primary trend, we have a pullback, we have a correction, and we think, oh no, all that lovely profit has now disappeared into thin air. But if you understand about VPA, if you understand about, as I said, this development of using time and not just time frames, what is happening on the charts, understanding primary trends, secondary trends, all will help and become a little bit clearer. Once things become clearer, you will become more confident in yourselves. Becoming more confident, I'm not saying overconfident, become a little bit more confident. It will give you clarity of thoughts, and you won't be afflicted by panic and your nerves. Your emotional state takes over when you're trading, when you're in the markets. Now, VPA is the explanation of the kind of the basis for the methodology is in the books that are available on Amazon. VPA is the technical look at the charts. To that, we have to add the fundamental, what is happening in the fundamental landscapes, but more importantly, we have a third element, which is looking at related markets. All these markets are interrelated, they all sort of bounce off each other, and understanding what is happening to the currencies, because it may be something else that is happening in another market, is also key to becoming a confident and successful trader. And what we've done is you can buy the books individually, or we have this, what we call the library. It's a digital library, and it's $9.99 on Amazon. I'm just going to whiz through quickly. This is from our Forex program. I know we have some of you joining us on the call today, which is lovely to have you here. In fact, we had a really nice email from one of our latest students who is very lucky, who's taking an extended break. It's sort of saying extended an adult gap year, isn't it, David? I think he's taking 2-3 years off. He's doing some fantastic traveling around the world. I think he's in South America at the moment, and he also purchased the program, gone through. We had a lovely email to say that he's learned so much, because what is in there, the information and knowledge that is in there, it will stand you in good stead for life. Yes, it applies to the forex market, but you can equally apply it to the other capital markets as well. So it's forex centric, but there's plenty in there that has a crossover to equities, bonds, commodities, etc. And we will, we talk about the aspects that are in the program in the webinar as we go along. Now, the proprietary software that we've developed, we have 4 specific indicators for forex. Here they are. They're part of what we call the currency dashboard. You'll see them in action as we go along. You can buy them as a dashboard, or you can buy them individually. We always start with the currency strength indicator. This is the individual performance of the currencies. What have they been doing in any time frame? We've seen there's been a big buy of the yen overnight, hasn't there? Because we've had the BOJ. There's a whole raft of fundamental news today to do with the British pound, the Swiss the Swiss franc. Yesterday we had the FOMC, all sorts of implications. How is that going to affect the markets? And that's all going to be reflected in the forex market. Then we have the matrix, which ranks the pairs, which are the pairs that are doing the being most bought, most sold. The array, which is a measure of strength of momentum, and that's really quite important. That's something I want to talk about, and it gives an indication of the time a trend has taken to develop. And then we have the heat map, which is a unique indicator which actually looks at what is happening in multiple time frames. But as I said, the best way to look at it is actually in action. As I said, you can buy one, a bundle, or the full package. You get 24/7 support for live. All upgrades are included. There's a 7-day money back guarantee. We're going to be using, I've got MT5, we've got NinjaTrader here in this webinar, but we are also developing indicators for TradeStation, and they're also available for TradingView. Advantage of the full package is that when you buy the full package, we develop new indicators. They are added to your package for free. Whatever you buy from us, you will always be credited if you ever want to upgrade. Quantumtrading.com is where you'll find the information that you need. The complete forex trading program is exactly what it says, but it includes the full package of trading indicators. You have to decide which platform that you would like to use. Quantumtradingeducation.com is where you will find all the information. And finally, my own site, annacooling.com, details of the books, analysis on indices, commodities. Oh, there's all sorts of stuff there. But really, how to apply VPA to these markets and instruments. Once you know the methodology, you can apply it to anything. If there's volume shown at the bottom of the chart, that's it. That's all you need. And it also includes cryptos. And we're always asked, can I apply it to binary options? Can I apply it to this? Can I apply it to that? Well, a chart is a chart. If it has these basic requirements, yes, you can. I'm just going to pass over to David, and I'll get my charts ready.
Thanks, darling, and a very warm welcome to you wherever you are in the world. Absolutely glorious weather here in the UK, and another wonderfully sunny day, September day. We're having a bit of a late summer here, which is not great for the garden, but there we go, in terms of watering at any rate. Good to have you here. If you have any questions, we're always happy to answer them on air. Sorry, I'm flicking around all over the place. Go away. Sorry, I had a video playing there. Apologies. Just got... yeah, I'm just watching the news because we've got BOJ Kuroda is actually speaking at the moment. So the press conference is ongoing right now, I believe. So just need to keep an eye on that in terms of the yen. If you have any questions, please just drop them in the chat box. Happy to answer them there for you. If they're short ones, if they're longer ones, we will answer them on the air. Just going to pass back to Anna, and we will get going. As I say, the conference is ongoing right now, so just keeping an eye on the yen.
And that's quite important because we talked about the Aussie yen. We've got some positions in the Aussie yen, and we had some fantastic. It's been a really nice run up as the markets have been bullish. And Aussie yen, it's again understanding one of these relationships. The Aussie yen is a proxy for risk. It's a proxy. So if the market is buying the yen, it's in a good mood. Risk assets are going up, and the Aussie yen is also the Australian is also tied to China. It's all understanding these interrelationships between the currency pairs and the rest of the market. And obviously, when you have items of fundamental news that can affect either of the currencies in a particular currency pair, then that is really likely to shake things up. And the Aussies had a bit of a sell-off overnight. They had the employment change, the unemployment rate, not hugely, not bad numbers as it were, but it's the interpretation of the fundamental news, and that is particularly pertinent as to what happened with the Fed yesterday. And again, it's understanding this is not binary. This is good fundamental news, currency goes up. Bad fundamental news, currency goes down. I wish it were as simple as that. It's much more nuanced. It's interpretation. It's it's the immediate number. What is going to happen next? Is talking about central banks? Is the central bank delivering what the market thought it was going to deliver? And if not, why not? And in the case of the FOMC, it's President Trump. Why hasn't Powell done what he has supposed to have done? A cut much more aggressively. You then get a tweet from Trump that says no guts, no sense, no vision, a terrible communicator. He actually appointed Jay Powell. So I think that sort of tweet was put to Jay Powell. I do feel for Jay Powell, actually. He's not, he's probably, a great central banker, but a communicator who's sometimes, there's the expression on his face, if you ever look at him, he always looks a bit startled, doesn't he, David? He's a bit like a rabbit caught in some headlights. Anyway, that's that. FOMC. Right, what's happening today? As I said, you can see here on the calendar, got the Swiss National Bank, and of course then we've got the British pound, we've got retail sales, we've got the BOE, and later on this afternoon we've got the Philly Fed. Now, we said that we have a three-dimensional approach to this market, but there's a fourth dimension, and that is the political dimension, because I don't know, central banks these days, they've come under a lot of pressure anyway, but their nominal independence, as it were, is really being tested to the limit, as it were. Right, that's what's on the agenda. A couple of things I just want to finish off with the FOMC. First of all, as I said, they did cut interest rates. As I said, this binary. One of the things about currencies, if a bank cuts interest rates, they want to weaken the currency. They want to become more. Weak currency makes if it's an export country, makes it more competitive. So with the dollar, Powell did deliver an interest rate cut yesterday, but it's what's called a hawkish cut, and this is where I said you need to understand these nuances. Now, what do you mean by a hawkish cut? In the sense that yes, we have cut, but this is probably what you're only going to get. We're not going to, I'm not going to give you the expectation that this is the first of a series. Some banks do signal that and are much more transparent. I think the Aussie, the RBA, as they say, well, this is one, but we're probably going to do it, in a few at the next meeting. They're kind of much more open about it. With the Fed, slightly different, and what the market does, it responds as if, in fact, rates have gone up, which is what we have seen with the dollar. And as I said, then there's the press conference, and then volatility comes in, and Powell, you've got the Trump tweet. Powell then has to kind of justify things, and it all goes sort of completely opposite to what we would expect. But what is interesting about the FOMC is behind all this, behind all the kind of noise, if you like, the media noise, is people will then look closely at the report itself, and there is a split on the FOMC. There's James Bullard, who is a very dovish. He wanted a bigger cut, but what's interesting, two members of the FOMC didn't want a cut at all, because the Fed doesn't believe that there is a recession on the horizon. The market does, the Fed doesn't. And when you have a split, such a big split within the, on a central bank committee, the market takes note. And there's a kind of a bit of a struggle going on at the moment. Markets are rising. At the moment, the indices are, I think they've all taken out their all-time high, David. Yeah. Not yet, but they're still, they're still going there. Now, normally, as I said, the dollar would fall. It isn't falling because, as I said, there is the tension between the two. So you and I, as mere independent retail traders, what do we try and make of all this? Well, we look at the charts and we look at what are the charts are telling us through VPA, volume and price, support and resistance, all those other things. There's one other thing that I must mention this week. You may have read about it and you think, oh, what does all that mean? It is explained in the program in more detail. It's this repo problem. This is actually quite interesting because it's one of those things that seems very esoteric, and you think, well, what's it got to do with me as a trader, etc., etc. But it's a stress within the credit markets. Basically, the banks lend to what banks have to keep reserves, as you know. When they have these reserves, they like to make them work for them, so they lend them to other banks, as it were. But what happened this week is that there was insufficient. There were two reasons for it, and you can read about it on this site at this article in Reuters. Basically, they said there was a combination of circumstances where a lot of big corporations had to pay tax, and then there was an auction, a treasury auction, and money was needed to buy these to buy these treasuries. And suddenly the banks were below the threshold that they are required, and there wasn't a bank. Where am I going to get this money from? And the Fed actually stepped in. Now, the reason why the markets got all sat up and took notice is because this also happened just before the big credit crisis back in 2008, 2007, 2008. So it's one of those things that you think, well, what is it actually got to do with, the day-to-day, as it were, running of the, my trades and the markets, but it's just something that is going on in the background, and it's all about confidence. Central, investors, traders, we all have to have confidence that, the central banks know what they are doing. David can explain it in a little bit more detail. He describes it, what do you describe it as a sluice gate, David, don't you? There's sort of, and the Fed then steps in, but it hasn't happened for some time. So Reuters, you can go read about it there. One other thing, as I said, talking about the fundamentals, a brilliant news site that's come up from, this has been developed by Harvard, and it's called the Atlas of Economic Complexity. It sounds awful, doesn't it? But in fact, it's just a way of looking at individual countries, where they make their, I think the BIS also had a very similar thing as we see here. What is their percentage? How do they make their money? Why do some economies do very well, other economies don't do so well? Why do countries that are producers of commodities, and that's all they produce, they don't have any value added to it? Why do, when commodity prices fall, oil, for example, or go up, that they're very dependent on one income stream, if you like, but more complex economies, such as we have here in the UK, in Europe, they will always, what gives them their edge? And of course, that's also going to be reflected in their currency and also the currency exchange. It's by this professor called, here we are, Ricardo Hausmann. There's all sorts of videos online. He's actually Venezuelan, so he kind of understands this thing. Obviously, Venezuela, an oil-producing company, is in a terrible, terrible state at the moment. But it's a new piece of, and it's all free. It's all available. There is the other one, as I said, from the BIS, but it also gives you, when you trade and you trade a currency or currency pair, you really need to get to know that pair from the fundamental perspectives. What does that country do? What is going to affect the performance of that country. Take the Aussie, it's heavily dependent on exports to China. So if China is reporting bad, not doing so well, that is going to affect the Aussie because they're not going to buy so much of their exports. So it's just a really nice way of getting that information. Right. This is the 1 hour, as I said earlier, what we want to see what the currencies are doing or have been doing. This is the hourly CSI, which is where we always start. I tend to look at the 2 hour. The MT5 has this ability. You've got many more time frames than MT4. David's got NinjaTrader. It's got more time. You can set up more time frames there as well. What's it telling me? What's been happening overnight? And I don't want the day. I want the hour. Back to the hour. We can see here. This is the Aussie. Obviously, been selling off, really, really sharply selling off. It looks as though it's been selling off against the Japanese yen. I've actually put two of our indicators on here at the same time. This is the matrix. Let's see what's happening. In fact, we can see here it is the Aussie yen has been the worst. Let's call it the worst in inverted commas. That's not really the right way to see it. It's just the pair that has been sold off the most in the weakest, as it were, in the Aussie yen. This number is quite important actually because it gives us an idea of just how weak that move has been. This is minus 104. Compare it with the Euro Aussie, which has obviously been going in the opposite direction. The Aussie's been sold, but it's been sold against the Euro. That's only plus 72. So those two numbers alone will tell us that the momentum, if you like, in the Aussie selling has been much stronger against the yen. Now shouldn't come as a big surprise because, as you know, when you look at a chart, things sell off much more quickly and harder and faster when going down, but when things are going up, they can sometimes really plod up and be just take longer for a trend and a move to develop, which is why David likes selling. It doesn't really like buying everything sells. As soon as it's red, that's it, I'm in. And it is, and to be honest, I haven't got the stats, but from experience, if you want to make money and you want to make it fast, you're going to make it faster when things sell off rather than when they are creeping upwards, as it were. One final thing before we look at the pound New Zealand in particular, there's one other site, one other article is this. We've talked about it before, and this actually proves what David and I have been banging on years. This is a report from the Bank of International Settlements, and it gives an idea of the volume of what's happening in the forex market. This is now a 6.6 trillion market. That's that day, isn't it, David? Yeah. That's just think about it, 6 trillion. London has 43% of that business. This market is sold to traders as anytime, any place, anywhere, which is true. It's absolutely true. Markets are moving all the time. But in reality, if the optimum time, I'm not going to say the best time, is the optimum time to trade is if you are able to do it is actually now. It's the tail end of Europe, the tail end of Asia, Europe coming in, then it's London, and even New York. When you have three markets going, it's just different. The big moves, the big churn, if you like, in this market is in London. So it's well worth looking at. As it says here, from 2016, it's gone from 5.1 trillion to 6.6, and it would be nice to take some of those points and make some money from it. So there we are. Right. Have you got? Can I just talk about the pound New Zealand? When I talked about time, David's looking at actual trades going on at the moment, so that's fine. So you're not just going to hear me yammering on, but I just wanted to talk about the pound New Zealand. As I said, it's something I've been talking about in the on my forex learn forex trading page. Okay, I just want to highlight something to you. if you come over here on the left hand side and have a look, this is a congestion phase. What happens with price action? We have congestion, then we have a break, then we have a nice primary trend, then we have a secondary trend, we have a pullback, a correction, and here we have a resumption of this primary trend. And you look at that and you think, oh, that looks fantastic, and it has been a fantastic trend. In fact, on our currency array, which we have here, which, as I said, is an indicator which measures strength of move, if you like, the pound New Zealand is pretty much sitting at the top of the heap. But I just want you to note one particular aspect again to do with time. We have this congestion phase here, then we have this volatility candle. We have an injection of momentum, of energy into the market. We have an injection of volume. Can you see the volume coming in? Huge amount of volume under that candle, another huge amount of volume under there. And this is why, if you understand this relationship between price and volume, it will help you, if you like, qualify the move that is happening as it develops on the chart. So, but the point I want to make here is, if we look at this point here, which is roughly 92, what have I got here? I've got 90, I had 92.48 roughly when it was moving in this consolidation phase. From this point here to this point here, where we have a 2-bar reversal that we see here, where we have the beginning of, as what we call the secondary trend, or the pullback, or the correction, which, by the way, this is the hourly chart. If you were on a 5-minute or a Renko chart, or on a faster chart, that is a perfectly tradable secondary trend, as it were, in the faster time frames. But let's just stick to this this time frame. If we count the number of candles that took this price from 92.48 to 95.66, which is about 300 pips, we have 16 candles. Then we have the pullback, perfectly tradable. Our trend monitor here was bright blue. There's actually slightly bright blue from the going back on the consolidation phase, but let's take it from this point here. It never went into bright red. It would have been bright red on the faster time frames. So we have this tradable secondary trend from this primary trend higher, this breakaway from the congestion phase. From here, when the primary trend then kicked back in, as it were, from here, which is roughly 94, I've taken it as 94.40 to 96.75. Where am I here? Where did I go here? 96 to here. I measured this before it went back into the congestion phase. We have, if my math is right, 30 candles and only 235 pips. So this idea of time, this idea of momentum, this idea how long things take. The reason this moved this far, this quickly, partly because of this injection of momentum through volatility that's measured by the average true range. That candle is outside the average true range for this instrument in this time frame. But also, if you look at the injection of volume, you need volume to move the price higher. And in this period, and also you need volume to take it away from this area of congestion. Congestion and consolidation, you can also see it as a time when the price is in balance, the market is in balance. There are there are buyers and sellers. It's just, going backwards and forwards one way. It's really got no direction. It doesn't know what it was. Maybe there was a piece of news. I think this was more to do with the pound. We see we've had a reversal of fortune for the pounds despite Brexit, and also I think the New Zealand was also selling off quite very heavily. So that's what I want to make a point about understanding time, not just time frames, but understanding what happens in a time frame when you have volatility and when you have a lot of volume. Next is, that's awfully interesting, but where is this going now? What's going to happen now? I'm actually going to pass over to David because I've had to go right up to the weekly chart to see what is happening in terms of support and resistance and where is this pair now heading. This is the weekly. There's been a break away from, again, a very, very long and extended congestion phase, perfectly tradable on the faster time frames. This is what we call the volume point of control. It's been in this, around this, rotating around this region, pulling away, but then coming back, and now it's moving higher. And if you move right up to the hour, the monthly, what's interesting is also this pair seems to be at a point with that huge injection of volatility and that fast move of 300 pips away from that congestion way down in the hourly chart. It seems to have given the pair some impetus and some desire to move away from, generally just sort of being in price agreement. So that's what I want to say about the pound yen. As I said, you've heard me talk long enough. David's actually been looking at what's happening at the live edge of the markets. If you've got any questions, please just put them into the chat box. Don't understand something, again, or you can email me, anna@annacooling.com.
Sorry, apologies. I was flipping around all over the place while Anna was talking. And I'll go back onto the pound New Zealand in a moment, if I may. Excuse me. Sorry about that. I've just got the Euro Aussie up for the time being. It's the usual panel of timeframes. I've got the 1, the 3, the 5 slung across the top, and I've got the 10, the 15, and the daily down at the bottom. And the reason that I'm just watching this for an opportunity, as Anna said, I have a bias to the short side, which I'm very conscious of, more than conscious of. And I suspect if you analysed all the trades over the years in all markets, you'd find probably something like an 80-20 split in favour of bearish markets, because, as Anna said, they fall much faster than they generally rise. It's not always true, but I suppose as a not a rule, I'm trying to think of another word, but as an indicator of what is likely to happen, short markets will generally move much more quickly. There's lots of different reasons for it, not least of all because the market makers and insiders are in a hurry to make money and to frighten the hell out of everyone, and then they reverse it and take more time. They're more leisurely in any move higher in taking profits. The reason I'm looking at the Euro Aussie right now is, as you might expect, I'm always looking for extremes on the currency strength indicator. Here we go. I've got this on 5, I've got this on 10, and this is on 15. So if we're down onto 5, the euro is very overbought, so it's right up at the top. The Canadian dollar is up here as well. It's just starting perhaps to kick over the euro, so starting to see maybe a little bit of selling coming into it. The Aussie down here, very beaten down. It's tried to rally earlier on in the morning for us. This is 8 o'clock London time, and bear in mind now we're also at the London crossover, which is another ideal opportunity for the market makers to get in and whipsaw the market around, particularly with the volume of business that's now going through the markets as London gets underway. And it's a terrific way for them to make money very, very easily, very quickly, in a matter of minutes. Most traders are totally unaware of it. That's on the 10-minute, exactly the same situation. We've got euro up here, we've got the Swiss franc up there as well. Bear in mind we've got SMB. I'm not quite sure whether that's been and gone yet. I'll pull up Forex Factory in a minute. There's Canadian up here as well. That's the only one really that's very oversold at the moment, so a little bit limited in terms of what I would be looking at for trading off an extreme, which is generally where I always start, purely because I like to get into a trend early. I'm quite relaxed about having a much wider stop loss to allow for the buffering that inevitably goes on. I'm probably staying out of the yen on an intraday at the moment because I just want to allow that settle. We've had the conference and all the rest of it, so there's a little bit of volatility in there. It's had the big sell, been some buying. Now it's moving around within that sort of range. So I'd be staying away from that for the time being. And you can see down here, the currency strength indicator is not just about what's overbought, oversold, what's moving strongly either to the upside or the downside, but it's also about when markets are, or currencies at any rate, are in a sideways move and really just not going anywhere with any great conviction. And that's certainly true in terms of the pound right now. It's oscillating around in quite a narrow range here. The dollar too, and here we've got the New Zealand dollar. You can see here the grey line. It's really not. It's not really got any direction there. So it tells you so much where to go and look. What are the opportunities in your particular chosen time frame? I'm down on the faster time frames here, but it could be anything. Just have a quick look at the currency matrix. This is on 5. The Euro Aussie, I think, was a couple of spots higher. It's just starting to come off a little bit. And what the currency matrix will reveal is not only when currency pairs are at potential extremes, but also the broad market sentiment. In other words, is the euro universally selling euros, in which case all this panel, all this these 7 currency pairs will all move to the bottom on this particular time frame. Of course, on the slightly slower time frames, that's on 10. Euro Aussie is still up at the top here, and the same is probably true on 15. There we go, we've got the CAD yen up here. But broadly speaking, the pair we're interested in, the Euro Aussie here, is up at the top. The Euro CAD here is probably being driven. You can see here we've got strong buying of the CAD, so that's what's really helping to maintain that mid-table. I'm on an Aussie dollar chart here, which is where the indicator is loaded. You can see it here on 15 with the Aussie dollar moving lower for the time being. So the actual buying that we want to see for the Aussie is not yet being shown, certainly against the dollar at any rate. Just head back onto the charts themselves. There we go. And what caught my eye, certainly on the 10-minute at any rate, we've got decent volume coming in here. This is London, so we're starting to see a tick up in volume. You may not be able to see it here. We've got a decent wick to that upper candle here. Looks like we've got another wick forming to this particular candle, but we've got a few minutes to run to that one. So we'll have to wait for that one to close and see the volume coming in, but you can see the volume building here in real time, starting to give us a heads up to a potential short setting up. And that's also what's developing. We saw, in fact, while Alan was talking, the reason I was a bit distracted is because, first of all, we saw the volatility come in here on the 1-minute chart, which gives us a heads up as to potential trap move, potential reversal. Also saw it over here on the 5-minute with a long-legged doji. And the doji candle, just pull that up full size for you. The doji candle is not indicative of anything other than indecision. So it's a nice signal to see. It tells you that you're going to see congestion of some description, but it doesn't indicate a reversal in trend. The next one certainly does. We've got a nice deep wick to the upper body, narrow body here, nice good volume under here. In terms of comparing volumes, you're looking at these two because this is the London session here, 8 o'clock, so we can compare from, where are we, Europe here, 7 o'clock. This is Europe open here, so this volume is all comparative in here, so we're quite happy comparing across this time frame. Now we're moving into London, so we're looking to compare this volume across this particular time frame. And we're starting to see that, and the move is developing nicely. It's what we expect to see. We've got extremes, and the trend monitor here on 1 minute is interesting because there's been no transition in color whatsoever. Normally you get these transitional colors here, the dark red, the darker blue. But here we've had none. We've literally gone straight through from what was a bullish phase of price action. We've now gone straight into a bearish phase of price action. What's also nice about this is you can see the trend line here is diving quite steeply, so it's telling us it's a decent move for the time being. We've got a low volume node coming up here. The market should move through there fairly rapidly if it's going to continue lower. Let's click that off, apologies. And on down through there into a slightly higher low. You can see the volume is constantly building and rebuilding in real time. It's what the indicator does. This is not a static thing. The volume point of control here, which is what was the fulcrum of the market, and you can think of it as a seesaw with 2 people of equal weight on either side. And in that situation, the market is evenly balanced. In other words, there's no bullish or bearish sentiment to drive the market one way or the other. As one or the other develops, as bullish sentiment or bearish sentiment develops, then it will drive the market in one direction or the other, either higher or lower. And that's what it's all about. This is simply indicating the maximum volume that we had at the volume point of control. There's a ton of volume here. There's lots of orders sitting here now. Traders trapped in weak positions, all sorts of stop limit orders, goodness knows what else in there. And as you move up and down the chart, as Anna said, you look at volume in exactly the same way as you do as a price-based support and resistance. So all these areas of volume where you've got these low volume regions or high volume regions, then you expect the market to either move through those cleanly if it's a low volume like here, or to struggle. So if the market moves to the upside, Getting through here is going to be a bit of a struggle because we've got higher volume, and then gradually as it recedes, the market is going to find that a little bit easier. What have we seen come in here? We've got a wick to the lower body, we've got decent volume coming in, so we've got a modicum of buying coming into the market at that point. Pretty weak response. It's okay, that's in agreement. The candle's in agreement with price, with the volume rather. So, you know, that's fine. There's no anomaly here. This was anomalous purely because we had volume coming in and the market closed up here. If this was straight selling, the market would have closed down here and would have carried on. But we haven't. We've seen a little bit of buying coming in here. So as a volume trader, we're not surprised to see the market tick up a little bit. That's what VPA is all about. It just gives you the confidence to understand why something has happened, and what is likely to happen next. This is up onto the 3-minute. Some nice signals here. Purely from a price-based perspective, just pull that open a little bit. There we go. Just from a price-based perspective, you know, this is weakness. We've got a deep wick to the upper body, narrow body, deep wick to the upper body, narrow body. And that's really what it's about. We had some buying coming in onto that candle, but a weak response to in an effort to rally. We've got some weakness here. We've got another big wick to the upper body. Good strong volume under there because we're in London. Little bit of buying coming in under this candle. And if we break through this region, the question you've got to ask yourself now is from a price-based perspective, because this is on the accumulation distribution indicator. These levels here, these red and blue levels, the thickness indicates how strong that region is, whether it's going to be a strong level or a slightly weaker level. So these levels here have only been tested once. You can maybe be able to see the little number 1 there, but they've just been tested once. These other guys here have been tested several times. This has been tested 4 times. This is a very strong region here. So from a trading perspective, if you're looking to jump into this short as a scalping trader, the question you've got to ask yourself is this trade within my risk parameters? Am I comfortable taking this trade? In other words, how much opportunity is there to make money here? And if I were looking at this as a scalping trader, I'd say very little, because you've got so many barriers in the way to a downwards move as an intraday scalper at any rate. The first is this level here, which will almost certainly come into play as a potential support platform. Then you've got rising volume anyway as you're moving deeper into this region. Then you've got the volume point of control itself, which will always act as a congestion area, simply by virtue of the fact that there is so much volume sitting there. Below that, you've got another level here, and on you go. Now, if you get through the bottom of this lot and down through here, then, you know, at that point, you might be comfortable taking a trade, which is down at 50. At the moment, we're up at 76. But in terms of taking a scalping position, it's not something I would consider right now, purely because there's too much congestion down here and barriers that are going to get in the way of any scalping move to the downside. So it's just a question of being patient and waiting. And that's what you have to wait for all the time. It's a question of balance. It's a question of decision making. Am I comfortable with taking a particular trade and looking at it from the perspective of the chart? This is not the nonsense. I'm sorry to be pedantic, but this is not the nonsense that a lot of traders talk about in terms of risk reward. You know, I need to have a 2-to-1 or a 3-to-1, all this sort of stuff. I'm sorry. It's just nonsense. The market doesn't care what you need or require for your risk comfort. And the way to look at it is to look at it from the perspective of the chart. What's on the chart? What is like to act as a barrier? And if you're looking at this example on a 15-minute time frame, there's very little below. If the market broke below 50 here, which you're looking at a moment ago, then to the downside, what have you got? You've got absolutely nothing. You've got pretty much clear water. You've got very light volume all the way down, and you've got a really nice run all the way back to this level. Then that may be comfortable for you. It may be what you require. It may be too long in terms of time frame because we're on a 15-minute here. So this is going to take some time to move all the way back down here. But it's just the concepts that you use to look at a chart and give you an indication of whether you believe that is a trade worth taking, both from the risk perspective of what the indicators are telling you, but also from the chart itself in terms of what is likely to cause this market to pause or hinder progress of the opportunity I'm taking. If I'm laying out 10 pips on the table, you know, can I see a 10 pip return? Am I seeing a 15 pip return? Am I seeing a 20 pip return, or potential for 30 or 40, whatever it may be? And yes, many trades you will go to 1-to-1. Absolutely. You may go less than that. You may see an opportunity to put 10 on the table and take 5 out of the market. In our book, that's perfectly fine. You cannot have a scenario on each and every trade where you're looking at the perfect scenario of 1 to 2, 1 to 3, 1 to 4, whatever it may be that you feel comfortable taking. It's just what's available. If you see an opportunity and you think, yeah, okay, fine, there's 5 or 10 pips to take here and I'm prepared to put 10 on the table, fine. So what? If it doesn't work out, on to the next one. It really is simple as that, but it's doing it from the chart perspective, not anything else. If we just go down onto the 10, we've got the volatility trigger here. So, again, it's using multiple time frames. This is not clean price action at the moment. We've got to wait and be patient. The market's going to oscillate around in there for the time being. It's got no great direction for the at the very fast time frames at the moment, at any rate. But this is still indicative of weakness. If we go back onto the currency strength indicator, and this is what I meant when you're looking at extremes, when you're looking for those opportunities to get in early, they come at a price. And the price is that you have to set a wider stop loss to allow for that buffering that's going on. And the other issue with that particular trade, a short trade on the Euro Aussie right now, is that whilst the Euro might move, the Aussie doesn't show any signs of doing so at the moment. Therefore, any move in Euro is going to be driven by Euro only, which is always dangerous because it won't have the same momentum as if it's driven by both sides of the currency equation. So if you're looking at selling euro, that's fine, but the pair to look at it now is actually euro dollar, because if we flip onto euro dollar, dollar's actually moving quite strongly. So let's go back onto the charts again, see how that's shaping up. Because at the moment, the euro Aussie is going nowhere. It's just in no man's land, and the reason for that is because the Aussie's not moving. But if the dollar's moving, then we should see it. Excuse me. That's also starting to move, but it's it's not moving that strongly. If we go down to, where are we, onto the 15-minute, again, we're trapped in volatility. We've got the volatility trigger, so we know we're going to see congestion there as well. Let's go on to 10 minutes. There we go. And we've got the same thing here. There's a lot of volatility around right now. There's a lot of trap moves going on. This is the London Open. Bear in mind, this is always the London Open. This is what you expect to see. You expect to see a lot of volatility come in, and in addition to that, trap moves to get you into position. The market will move fast. It will have moved fast through this region. Bang. What happens? The volatility trigger will come in. It will open before the candle has actually closed. So once the price action has moved outside the average true range, which is how the indicator works, then that will trigger the indicator itself. You will know for a fact that the market makers are participating. You've got 1.5 tons of volume under that candle. They are in there. They're now trapping traders. All these traders will have jumped in here short. Now the market's going long. They're all being squeezed, probably being stopped out fairly soon. This is 10.36, this is 10.42. So scalping traders will now be feeling the pain and wondering why they did it in the first place. So it's just understanding how these markets work, understanding the traps. Here we are, we've got it on 5, exactly the same thing. It's what you expect to see at the London Open. Bang, bang, down it comes. Now it's reversing off the volume point of control, back up again. That's the power of the indicator. It's such a simple indicator. If you haven't got it, it's only $57, for goodness sake. It'll get you out of so much trouble. If you're not in the market, you stay out and you wait for the market to settle and just give some positive direction. And almost invariably, you're not necessarily going to get a reversal, but you will get congestion and sideways price action. Just want to go and see what's happening in terms of the indices, in terms of risk at the moment. This is on, I've got the YM here, the NQ and the ES. This is on 3-minute. Exactly the same process going on here. This is on Globex, so we're running on the electronic contract. This trades pretty much 24/7, not entirely 24/7, but because there is settlement, but almost 24/7. You can see what's going on. This is just gives you a window on risk. Identical price action. What have we got? London Open comes in, and it makes the point that people don't think the US markets are connected to anything at this time. They think, well, the markets are closed. The exchange is not. It's closed. I think you've just someone's just kicked me off. I think Anna's just kicked me off the live feed. Apologies. Apologies about that. That's okay. Apologies. I'll get the live feed back in a minute. A lot of traders labour under this misapprehension that markets are not connected somehow, and because one exchange is closed, well, the US markets are closed, and therefore not much going on. This is the US market. This is the Nasdaq. This is trading on Globex. This is London Open. Look at the massive spike in volume. These markets are running 24/7. This tells you about sentiment, tells you what's going on. Again, the trigger is the volatility trap. Bang, down we go, a ton of volume in. Now we're going to reverse off it and back the other way. It's just so simple, so powerful, and just such an easy way for the market makers to make money across all the markets, not just in Forex, but on related markets as well. Have I got the feedback? No? Which one? I'm not sure which one you're on now. Okay, let's try. I might kick you off. Apologies, just reloading. Are you still on? Is your feed? Have I kicked you off now? Apologies. Sorry, we have a couple of feeds. Right, let's just go back onto. Let's just go down onto the indices themselves. These are the currency indices on 5 minute. Just waiting for them to load. Sorry. There we go. Just come back to that in a moment. It's just loading up. Oh, go away. No, it was me. Sorry.
Are you okay?
Everything's reloading. I should reload everything. Apologies. Reload. There we go. Now we're back again. Okay, fine.
Are you okay?
Yeah, back again. This is okay. Here we are. We're on euro dollar, chopping around inside the volatility candle. That's where we're going to be for a little while. So, it's not one that I'm prepared to take at the moment, but it's certainly, still have my eye on. Let's wait for these to load now. Sorry about this. Let's load them up. That's what we're seeing right now. There's some decent pound buying coming into the market, and the yen is falling on 5. So maybe one to look at if you're looking for a crossover, you're looking to jump on a trend that's already underway. Strong selling of the Swiss franc, that is motoring. So dollar Swiss might be one if you're looking to jump on a trend. Let's go and have a quick look at that one, and we'll also have a look at the pound yen. Right, let's have a look at those. Dollar Swiss. Flick that on. That was buying dollars, selling Swiss. So that's we've got the volatility here, but the market is moving away from that. That's what I said. You have to wait until it's cleared. In terms of this move, what I don't particularly like about this particular move is the fact that we've got falling volume. So we've got a rising market. We've got a ton of volume under here, which is fine. Now we're starting to break away, but we've actually got falling volume under that one. So for the time being, yes, the trend monitors transition, trend lines rising, but I don't like the falling volume aspect of it in terms of where it's going next. In terms of looking at it from the chart perspective, let's just hop up onto 10. In terms of a chart perspective, it's not too bad for an opportunity. We need to break away from the volume point of control, so we need to see decent volume under this candle. You probably can't see it, but the wick on this candle is up here, so we've already tested this level. We've got another one here. These are minor, so that's no problem in terms of a move higher. So in terms of taking an opportunity to the upside, this would actually shape up quite nicely. You've got a nice fall away in volume, so that's going to reduce the impact in terms of any advance. And you've got very lightweight price resistance on the accumulation distribution indicator. So in terms of a move higher, that's a good thing from the perspective that we're seeing at the moment. It's pretty weak price action, and it's likely to come off in the near future. We've also got the 15-minute here. You can see we've got the volatility trigger there, and it's not breaking away from that. Similar sort of price-based picture. Trend monitor here is starting its first transition, maybe into some bullish momentum. We've got it down on 1 minute, obviously, as an out-and-out scalping trader. Let's have a quick look at this, see what we can pick up here. Volume here has fallen away, so the selling pressure under those two has fallen away a little bit. A bit of a weak response. Increase in selling pressure under this one when you look at it in terms of this one. So it's not looking terribly strong to the upside. It's been a decent run for a scalping trader, but not a huge amount. It's 10 pips or so. What was the other one? Pound yen, wasn't it? I think the pound yen was moving. Let's just have a quick look at the pound yen. Let's just go and look at the 5 minute there. That's pound Aussie. big wick to the upper body there. You know, it's not looking great for that particular move. Decent volume, not excessively high, but then this is the open. So this tends to be, generally speaking, the biggest volume, certainly in the early sort of few minutes of trading, but certainly weak under that candle, so not looking terribly strong for going much further. What was the other one? Pound yen, wasn't it? I think. Let's have a quick look at pound yen. Similar sort of thing here. Again, you know, trap moves all over the place. No huge direction. Let's just pull up the 1 minute. Always a good chart. You know, the 1 minute chart is great for learning VPA. If you're not that quick at it and you want to learn it fast, then this is the way to do it on 1 minute, because this will sharpen it up dramatically. You get the weakness coming in here. You know, here it is, deep wick to the upper body, decent volume under there. You know, another one there, not really going very far. Good volume under there, not really developing as it should. And then we're off to the downside. A little bit of buying coming under this candle, so we're going to see a bounce off there. You know, it's nothing particularly strong at the moment. It's just more sideways on that particular pair. Let's go back onto them again. Okay, what are we seeing? Okay, we've still got decent buying in the dollar. Dollar yen maybe. Dollar yen's very tricky. It doesn't behave in the way that you might expect it to behave. That's on 10. That's on 15. Let's go back onto 5 again. The Aussie is starting to move. Ironically, here it is. You can see it kicking off the bottom now, starting to kick up a little bit. So, you know, maybe the euro is one to revisit, or maybe you look at something like the CAD. Now, the CAD looks as though it's starting to roll over, so maybe the Aussie CAD might be one. Just go and have a look at that chart. Load those up. So we're looking for a buying Aussie and selling Canadian. Okay. What was that? A very funny noise. Just that we're seeing that develop on 1. Apologies, got 2 dogs with us. I'm sure you know them well, Bertie and Harry. I'm just going to switch off for a moment. Apologies, they're normally asleep. Something's woken them up. Okay, this is on the 1 minute. Chart monitor transition, trend lines rising, volume looks okay for the time being. Nothing really in the way on that chart, so we've got low volume node here, we've got light resistance potentially here up with an area that's been tested twice. We've moved through this little cluster, this very minor cluster here, it's been tested literally as I'm speaking. The trend monitor here you can see is transitioning through to a darker blue. We're seeing a transition here through to darker red, so that's all positive. Basically what's happening is the sentiment is rippling through. What we want to see obviously is this transition to bright blue at some point in the not too distant, and this transition through to, could go straight through to bright blue if it's a strong move, or through to a darker blue. No change on 10, wouldn't expect to see it there, and certainly not down on 15 either. Let's have a look at the 3 minute. In terms of where this trade is likely to develop, we're going to run into the volume point of control. So yes, we'll get through a low volume node and possibly through this this minor cluster of resistance. But if we're going to break through here, then this is going to take effort. The market's going to congest at that point. So if we're scalping, then this is only what a handful of points higher. You know, it's a couple of pips here. So you know, you're on this chart, and this is the power of volume price analysis and also the indicators. First of all, volume price analysis is the base methodology. It gives you that insight into what is likely to happen next. But then using multiple timeframes and indicators, you're looking at the volume point of control here, which is well below now. This is 11. Okay, this is only 4 pips, but you know, nevertheless, it's down here. And when the market starts to stall up here, and you're looking at this chart in isolation and thinking, well, why is the market stalled? Well, if you're up on, where is it, the 3 minute or the 5 minute? I can't remember. There we are. That's on the 3 minute. There we go. That's 5 minute. Now what's happened is, because we're seeing market volume building in real time, which is nice, the volume point of control has actually moved. We've got it at a higher level. And now what we're looking at is whether we're going to break through these various regions. We've got some decent volume here, which was pretty high. So in terms of a pause point, we've also got price-based resistance there. So it's going to act as resistance for two reasons. If we can struggle through there, then we've got a lower volume area here before we actually get up to the top here. If we go up onto the 5 minute, we're just literally testing this pretty strong level here. We've also got a ton of volume in here. So for the market to break through here, and look at the volume, it's actually falling away all the time. So it doesn't look strong for the time being. But nevertheless, you've just got to stay with it. I have got this switched off at the moment. In fact, I'd put it back on again. Where are we? Indicators. There we go. I often have this off purely because, where are we? There we go, on bar close. Let's put it on each price change. There we go. That'll now appear down below here. So you can see the little volume starting to build purely because I have so much data coming in. So it's starting to develop. It's it's early days. Let's have a look at the 15, see what we've got here. And of course, all this volume over here is distorted by what went on overnight. This is 2:30 our time, 3 o'clock our time, so the middle of the night for us. A lot of volume under that candle, congestion down, and now we're starting to see the potential for reversal. We've got a 2-bar reversal there, which is helpful. And as I said earlier, it's really looking at the chart and eyeballing it from the perspective of, okay, well, I'm going to get into this move. Where is the market like to struggle? And it'll start to struggle through here because we've got high volume, and through here, if we can get up to 25, which is 9 pips away, then the travel through 25 up to 30 and maybe even up as high as 35 is relatively straightforward and clean. Then we get up to some more high volume here, so moving through the 40, 45 area, and if we get up to 45, then this should be straight run through. There's absolutely nothing there to hinder the market whatsoever. Still tracking up nicely. Let's go back and have a look at where we are in terms of the indicators themselves. Yeah, I know. Sorry, Anna told me it's gone half past. Sorry, just get a bit carried away here. This is a nice move that's starting to develop. The the Aussie Canadian. The Aussie is starting to tick up, as you can see here. The Canadian is now starting to roll over very nicely. Nice steep trend on it, so decent selling under that. If we head on to the currency matrix, get out of the way. Sorry, it jumps up and down all the time. This is, and what's also interesting, this is the Aussie dollar, as I mentioned earlier. You can see it up here. This is on the Aussie dollar. You can see the Aussie buying that's starting to come in here now as well, starting to trickle in. And if you were trading the Aussie dollar, then purely from an eyeball perspective, no indicators on here, but just from a support and resistance perspective, there's a nice little bit of support building here. But what's more important is this resistance region here, through there.
David, sorry, somebody says they can't see your chart, actually.
Oh.
It's just stuck on the indices.
Oh, stuck on the indices. Oh, apologies. Is anyone else stuck on the indices? No. What you should be looking at is my currency. No, thanks, David. So you should be looking at the 5 minute. My cursor up here, and this is the currency matrix, and it's on the Aussie dollar chart. Yeah, brilliant. Thanks, David. Appreciate it. So that's the 5 minute matrix. There we go. What was I isolating out? I can't remember now. Aussie CAD. Okay, let's have a look at the CAD. Okay, the Aussie CAD is up here at the moment on 5. And in terms of isolating out the Canadian, what we want to see is, let's just head back onto the charts for a moment. Let's see where we are. There we go. So we want to see buying of the Aussie, and we want to see that selling of the Canadian dollar. So in terms of the matrix, just go back onto the matrix. There we are. What we want to see is really to make sure that we're in Aussie CAD, but we want to see that selling of the CAD developing. So we want to see pairs like this, for example, the CAD Swiss. This is obviously being driven by the Swiss franc as well, no doubt, after the SNB. But what you want to see is the Canadian dollar selling universally across the complex, in which case the risk on the trade will be that much lower. Just head up onto 10 minute, isolate out the CAD. There we go. And up onto 15, which is just loading, apologies. And then you've got the currency array as well. And you'll be looking at not only where your particular pair is ranking on the ladder, but also in terms of the strength of the trend, in terms of which is the ideal pair to be trading right now, where is the trend strength, what is the strongest mover, either to the upside or the downside, and also is the sentiment universal across the complex. Just go back onto the charts one last time. There we go. And what's happening now in terms of this move? Well, it's developing. It's not developing that quickly, but it is developing nevertheless. We've got a volatility trigger here on 1. Decent volume under here. So now what we're expecting is some congestion at this level. We've got a low volume node ahead. Trend monitor's bright blue, helping to support the move. We've got some nice volume coming under 3. So we've had a move to the downside, but look at the volume that's coming to support the move. That's buying. That's come in, the market's gone south, the buyers have stepped in big time and pushed it back up again. So in terms of the move, that's a very positive sign. The trend monitor is nice and blue, the trend line is rising, that's great. We're through that region there. We've got a little cluster here of 2. This is a little bit stronger. We've got a little bit of lightweight volume here, but we are going to move steadily towards the volume point of control, which is up at 24. So we've got another 6 or 7 pips to go before we start hitting that particular area of trouble. Let's just have a look here. And really, I suppose this is the chart that will dictate ultimately whether this move really gets some legs, because if we get through this region here, and as I said earlier on, you've got clear water right the way through up to the volume point of control almost at 38. So that's a decent move. You've got 20 pips of clear water pretty much in here. Trend monitor, as you can see the trend line here is starting to cross over. It's moved through the fulcrum of 0 here, which is this black line. It's also changed color from the darker red, it's gone to the darker blue, so it's starting to pick up this change in sentiment, which we're seeing reflected on the other time frames now. Let's head back up onto 1 minute for a moment. Here we go. We want to see a nice, decent bit of volume under this candle. That's good, that's fine, nice volume, nice candle, no wicks to top and bottom. So, it's a nice solid price and volume in agreement, no anomalies whatsoever on that particular candle, and just helping to develop the trend higher. And really that's just how to, I suppose, what we do all the time is we are constantly monitoring, recalibrating, we're looking across the time frames, we're looking at opportunities and then maybe rejecting them, saying, no, I don't like that one. There's too much in the way, there's not enough opportunity in there for us. And then going back and seeing opportunities develop, we're seeing strength coming in and weakness coming into another currency, going back and looking at that chart. Yeah, that's an opportunity I'll take, and so on and so forth. So that's what we're doing constantly all day long. You may refine that in many, many different ways in terms of your tactical approaches. You may decide that reversal trading isn't for you. You want to jump on trends. You may decide that you only want to trade particular pairs. You want to trade on 3 or 4 pairs only and nothing else. We trade everything. We're completely indiscriminate. We don't care. We just trade the market, whatever it is. We don't care what instrument it is or what market it is. We just trade to make money. That's what we're here for. And all we want to do is just to analyze what we're doing and to try and keep the risk as low as possible. And that encompasses everything from setting your stop losses to understanding whether the universal flow of sentiment to a currency is across the complex or whether you're trading in isolation. It's looking at risk sentiment across related markets. It's understanding what the bond markets are doing. It's understanding what the primary currencies are doing. It's understanding what commodity markets are doing. It's understanding what the fundamentals are telling you, etc., etc. It's pulling it all together into this related market approach that we use all the time, and then trading accordingly. And this is developing nicely. It's not developing particularly quickly, but there's nothing at the moment to suggest that this is going to run out of steam. And if we go back onto the CSI, just one last time, I'll just go down to the 5 minute. Have a quick look at that. There we go. See where we are. That's what we're seeing right now. There we are. And we've got this very strong selling. The move is really being driven now through the prism of selling on the Canadian dollar. The Aussie, as you can see, has kicked over a little bit, so it's getting a little bit of weakness here. So that's why the trend is not particularly strong, but certainly in terms of the CAD it is. And look at the strength of buying that's come into the Swiss franc, absolutely massive. So we've had very strong move in the Swiss franc. So if you looked at the Canadian Swiss, for example, maybe saw this coming in at the time. I wasn't looking at it particularly, but if you saw this crossover perhaps, and you saw this coming in, you know, again, it's an opportunity. That would be a very, very strong trend because you've got strong selling in the Canadian, counterbalanced with strong buying in the Swiss franc. And you've got a similar approach in terms of the dollar as well. So markets are really moving now as we get away from the London Open. I'm going to pass back to Anna. I've been rabbiting on too long. Apologies if I can find my chat box.
I've actually uploaded my Ninja 7. David's got Ninja 8. I've got Ninja 7. I just haven't got around to loading up Ninja 8. But as I said when we first started, we are also developing for TradeStation, which is a fantastic platform. We haven't used TradeStation for some time, and now we have the opportunity to develop our indicators for the platform. It's given us an excuse to go back to the platform, and they've upgraded it considerably, David, since the last time, haven't they? Yeah. There's some amazing things on there, and for us, from a volume perspective, we've got some very exciting things on the horizon that we think we can do. Is it based on price and time as well? Bringing in more time, as I was talking about time all the time, excuse the pun. But very quickly, the other two reasons why I've put up the Ninja is because it allows me, I know it sounds silly, allows me to put up the two CSIs. I've got the one with a white background, which is the 60-minute one, and I've got a 10-minute one where I've got the CSI and the matrix. A little bit scrunched. I'm sorry if it's coming through a little bit scrunched on the screen. But what I'm looking for is I use the hourly chart a lot. I sometimes look at the 2-hourly chart, but the hourly chart in particular, because it's easy to see this sort of a change of sentiment, this shift as we move from one session to the other. And when we have an overextension, particularly on the hour and the 2-hour, we want to see whether that is going to provide an opportunity for a reversal down, as I said, on the faster timeframes. And I've actually got the 10-minute down here for the CSI, and we've got here, we saw overnight there was some strong buying of the yen and some heavy selling of the Aussie, and we can see them here overextended on the hour. Well, how does that actually play out on the 10-minute chart? And what's interesting is the sort of the selling that we've had of the yen. It's been not a smooth run lower, neither has it been a smooth run higher for the Aussie, but it looks like now, certainly on this, you know, markets have decided, you know, whatever it was that they were nervous about, you know, that the sun is coming out, as it were. And I've got here the ranking of the yen pairs. So we've got selling of the yen, and we've got obviously buying of the counter currency. So where does that rank? Well, that's actually just ranked at number 5 at the moment. We've got, as David said, this because there's been a strong move in the Swiss. You can see the Swiss is sort of way up ahead in terms of buying and selling it, which is interesting because the Swiss and the yen are both safe haven currencies. So it's an interesting play on that one. Then we've got pound yen, we've got dollar yen, as I said, the Aussie yen, which is at number 5. But I think it's got more potential to move. The Swiss yen has had a sort of a decent move higher. The numbers can tell us an awful lot, and we're actually looking at the way we're looking at a way of with the numbers that the matrix produces, is looking at a way of being able to leverage the rate of change, if you like. It's the rate of change in the numbers, David, isn't it, that we're looking at? Yes, it's looking at the rate of change, and when a number you see on a particular time frame for the matrix, so this is a 10-minute, for example, so is 21 on a 10-minute chart, is that an extreme? Is minus 16, is that an extreme, or is it an average value? It's really looking at, because what we're always trying to establish is, as I said right at the beginning, is the move that is underway. Can you hear me? I've disappeared. It's the move that is underway. is it sort of, how long is it going to take to get there? Is it going to take a long time, as we saw with the pound New Zealand? You know, we had 300 pips in 16 candles. We had 235 pips. It took 30 candles, 30 hours, because we want to be in the market for the optimum time to take the maximum number of pips. And we need all this kind of information to help us judge whether, you know, staying in a trade for 30 hours, well, that might just be, you know, the risk of that, not the financial risk necessarily, but the risk to your emotion, as it were, is just too much for you to, I can't possibly say 30 hours in a trade, it's too much. And because you have to remember also, this market is constantly being assaulted by fundamental news, political news, what's happening in other markets. So this market seems very simple. You're just being asked to make a binary decision. Is it going up or is it going down? But boy, oh boy, it's much, much more complicated than that. So that's right. Now, the other reason I wanted just to finish up on this is the monthly chart. Let's go back to the pound New Zealand, because the indicators for Ninja Traders, we because the way the data is delivered, it's allowed us to develop in, I would say, they are more sophisticated. It allows us to leverage the data that is available on the platform, because ultimately a platform is only as good as you know, you can make it work for you depending on the data that is being delivered. And MT45 is fantastic, they're great platforms when you start, but there'll come a point, I think, then you may have to look beyond MT4 and MT5, particularly if you use the kind of information that these platforms contain in terms of volume and you know, the data that it produces. It allows us to develop just different indicators. And the reason I've put the pound New Zealand on, we have these levels on MT5, these resistance levels up ahead, but what we have with Ninja is the strength, if you like, of the levels, which will also tell us how much volume is going to be needed to actually shift this price higher, and whether it's going to take, you know, is it going to go through, it's either going to need an injection of volatility because of a piece of news, whatever that, however that volatility is delivered, because it's got the pound in there. It could be a piece of Brexit news which will force it through. This is the volume that this is the monthly chart. This is the volume that came in last month. Now that alone, which is why it's important to look at the longer term, the slower time frame chart. That is, yeah, for under that candle, that is a lot of buying under there. That's a huge amount of buying. So that alone will tell you that this is, you know, this is setting up possibly for something important. It's also been, here we have the volume point of control, which we had on the MT5 platform as well. This is the volume that is building in the move that we see at the moment. Not sure it's going to be the same amount of this, but, you know, we've got a couple of weeks left for September, but even just eyeballing it, that was a lot of buying under there. But where is it now? It's, you can see this hatch line here. This is 12 times. It's been tested on 12 times. Every time it's tested and it fails to break through, the resistance gets stronger. And it's similar with support as well. Once it goes through there, yes, you've then got volume-based resistance from the volume point of control. These are these this is the shading that goes across here. Then we have a relatively minor level at 2000, 2000 there, and then we hit this level here. So it's really, really, really interesting on the pound New Zealand. It may not be a pair that you consider, but it could be a pair that you could consider maybe for some slower, you know, from trades on a over a longer horizon. And what I would also say, and I may be wrong, you know, you may not agree with me, if you are looking to trade maybe the slower time frames and look at this from a you know, the days, even weeks or so, I actually think you need a platform you move step up from the MetaQuotes platform, and you kind of move on to, as I said, we've got Ninja, and we will have TradeStation as well. MetaTrade, as I said, is fantastic. Lots of traders use it, but then they use other, I think they use other approaches. They tend to maybe use more Fibonacci, much more sort of mathematical, geometric look at charts. Nothing wrong with that. I think you can do that, but I always think those systems, those methods are much, they're enhanced, if you like, if you actually look at the elements of, you apply volume price analysis to those methodologies as well. Anything else? That's it. I'm really sorry. We've gone way over time. I think I'm gonna get David to cut this down. Do you want to cut it down? Maybe chop it up or something. Thank you. So, but I hope you've enjoyed it. I hope you've learnt something. Have you done all the questions, Ryan? Is that okay?
I've just answered Chris on
Yep.
forex one, yeah.
Yeah, David, there we are. Let's have a look. There was a question here down here, Chris. I mentioned a Learn Forex page. Oh yes, that's in Facebook. It's in Facebook. It's just one of the Facebook pages that I run, and I tend to put. And there's also my Twitter feed. I've got, how many followers? There, about 7,000. Yeah, it's about Twitter's. I do retweet a lot of people. I do tend to follow some interesting people out there in this big wide world. So if you can always catch me on Twitter as well, Facebook. There's you've just got to. Trying to get this information out there through as many channels as possible. And as I said, it's not only the price action, but it's everything else that we've talked about today. We've gone over time. We've done it kind of deliberately because we're not around next week, are we? Yes, or probably the week after. We're actually having a little break, so we thought we'd do an extra long session to to make up for it slightly. If we can deliver a webinar where we are, we will. But it really all depends on our connectivity. We're actually we've got some travelling to do in Europe. Should be, but watch out for the emails. They'll come through the you'll be notified whether we are online or not. Anyway, have a wonderful trading day, the rest of the trading week, and we will catch you next time. Take care.